Hey, welcome back everyone to yet another video. So 2 days ago, I did a YouTube video and I said, is the dollar going to the moon? And guess what? It did. And that goes for all traders out there, as well as traders from other markets. Get ready for a lot of dollar strength. So well done for everyone that watched the video and understood why I was saying back the dollar and obviously taking advantage of all the trades. So today's video is another exciting video, and today's video is about the S&P 500 and what the hell is going on. But don't worry, I'm here to explain it to you. So guys, have you seen the move on the S&P 500? If you haven't, I recommend pausing the video right now and going and check it out. Now my goal is to explain to you whether this is a credible move and should we be buying these dips, or do we believe in the conspiracy theory from the PPT? Now the PPT is the plunge protection team. Are they going to step in and start buying everything back up? Well guys, I'm here to tell you that this conspiracy theory is true. This is where very big banks and players come in and they save the S&P 500, especially after some of these big drops. But should we be buying? Guys, let me break this down to you. Let me actually start off by actually telling you what moves the S&P and what actually caused the move that happened recently. Now this should have actually been a few weeks ago, maybe mid-December, when we actually had a 12 and 15% move because of the Fed meeting. And that moved everything across the board, especially equities. So personally guys, I believe that this move on the S&P 500 should have actually happened a few weeks ago, maybe mid-December. Back then we had around a 12 or 15% fall, and this was all because of a Fed meeting. Now that actually moved everything across the board, especially in equities. Now moves like this, when the PPT step in, can sometimes happen quickly or slowly. It's a correction, it's not a turnaround. It's a V-shape, guys, that happens in the markets, talking to all of you technical traders out there. Now, I know the most recent movement on the S&P 500 actually looks like a beautiful hammer candlestick, which it is. And you can see that on the weekly and daily time frame, which I'll show you in a minute. But what if I actually told you this doesn't mean anything? And we actually need to find out about why this is moving. And now, guys, I love technicals. I love looking at the S&P 500, especially in a daily time frame where we can actually see that hammer candlestick formation. It's a reversal signal. For all those retail traders out there, you will be getting killed buying into these dips because they think simply after seeing a hammer candlestick, we're going to continue another leg to the upside. But guys, this is wrong. What we need to look into is what actually moves the S&P 500 and what it's actually made up of. So it is actually also the most highest traders index in the world, unlike the Dow, especially Dow Cash. This is where the big boys come to play. Now the S&P 500, especially futures, you basically can trade the crap out of it. You can trade the China out of it. Early hours of the day, morning, whenever you want. It even moves perfectly in the Asia session as well, not only in London, US. It's probably the best metric for all indices and equities. That said, it doesn't get affected by the dollar, and this is why we need to look at dollar yen and the 10-year yield. They are joined by the hips, guys, and sometimes they have a relationship which gets stronger and weaker, and I'll explain more of that in a minute. But you can't talk about the S&P 500 without talking about dollar yen and again that 10-year yield. So it's very, very important. And then you have the options guys who are really powerful with the S&P 500, not so much in the FX markets. And then we have a really, really fancy word which I'm going to explain to you guys, which is short gamma. Now this is an options event, a mini options event. That actually is a fancy word which is basically when you get taken out of all of your sell stops and you get taken out of the market, which is due when the market falls further and further and further, and then again that short gamma happens, market falls further. It's basically the opposite of squeezing, for example. So basically this is triggering all stocks to go lower because of the short gamma. Now some asset managers, especially during a gamma event, are often incomplete, and they have to have risk managers coming around and knocking on the door saying, guys, we need to get out of these positions because of short gamma. So why do retail traders get killed? Well, for me, they look way too much into a move and they actually don't know the story behind it, and they actually end up guessing, and they don't usually guess it correctly. And in the real world, guys, this is where the institutional world, some moves actually don't make sense. And they do it because of positioning and flows. And this is actually what kills retail traders. You'll get a lot of retail traders buying into dips, and recently you've seen them get whipped out and they don't actually know the reasoning behind it. Now, if you're a retail trader, you need to ask, okay, where do I buy the dip? And do I? How much pain will it cost me? Where's your stop loss going to go? And being most honest, probably you're going to get stopped out 3-4 times and just keep on trying to buy these dips. Now, the recent bounce, which we've seen in equities and encouraging the S&P bulls to come out to ignore the Fed like they did in December. Now, Fed have always been, and recently, super hawkish, but the S&P didn't really care. It didn't do anything, guys. And the key thing to focus on right now is the data that's going to come out for the Federal Reserve in March, which I mentioned in my previous video about how they're going to look at their policy and changing the environment that we're in right now. Now, tonight, there might be a bit of a dress rehearsal. However, we have obviously the FOMC meeting, but the real date we need to look out for is in March. The Fed bar is set very, very high there on the hawkish bar. It's so high for the Fed right now. So I'm actually shooting this video at this time while the FOMC meeting is actually going on. And guess what, guys? If you watch my previous dollar video, look at where the dollar should go. You would have to be on the right side of the move as the Fed come out with fairly hawkish comments on this release. Now, reiterating on the growth in the economy right now, it's quite firm. The labor market is doing pretty well, and they're looking at starting to reduce assets and removing things from the balance sheet once interest rates have been changed. So, guys, the Fed right now are talking about policy change, and you have to be on the right side of it, especially if they're hawkish. Now, reiterating that on growth of the economy, right now everything's been quite firm, as well as a tight labor market, and now they're going to start to look at reducing assets from the balance sheets. Now, once they've done that, then rates will have to be changed. And fairly hawkish Fed, especially ahead of the meeting in March, which is a good thing for us, especially if you watch my last YouTube video when I talked about where the dollar was going to go. Now, what the Fed actually like is when they actually rate hike, it drains the liquidity. And that's when the S&P 500 gets the memo and it will start to get priced in. This is making people have a false sense of security, guys. With the current price action we're seeing on the S&P 500, a lot of people could get snatched in with these shorts and rejections and thinking these are actually reversals. This is just rebalancing. It doesn't actually mean that we have to be bullish long term. In price action, yes, it can look bullish. It's a hammer, double bottom, all of this great stuff you guys technically look at, but it doesn't mean you have to buy with both arms and legs and get in. Risk FX did not get the memo yet. Look where Aussie dollar is trading. It's trading higher, but not that much because of this bounce. If the move was real FX, we would have seen a move much higher, especially on CAD yen and Aussie yen. Now, it didn't really move much, to be honest with you guys. This move was simply a washout of positions, and it was driven and applied options, and of course, because of negative gamma. Guys, this move was simply a washout of positions, but this is what I feel. It was driven and applied by options and negative short gamma. The other reason why retail traders always get killed, and it's because of an exploding volatility this year, and it just won't be in S&P and be in everything. There'll be a massive explosion in volatility across all asset classes, trust me. There's a lot of divergence going on, guys. You have the Fed versus the China story. One is tightening, one is easing, and somebody's wrong. You have a potential policy mistake going on. Inflation, of course, is not transitory, which of course we know, and dollar is being bought up heavily. Hopefully you listened to watch my last video, but the whole ecosystem is changing. There's a lot more divergence. Things are being stretched like a rubber band and things can snap. And of course you have Fed versus SNB, Swiss National Bank, which is worth, by the way, $1 trillion. One is wanting to hike rates and the other one has negative rates. ECB doesn't even really know what it's doing. You have Bank of England hiking rates by a 15 basis points move. Bank of Canada are behind the Fed, and they could have actually raised and hiked rates today, but they didn't. They hesitated. And this is all volume. And I'm actually marginally at S&P bear right now. This is what I'm thinking, because the Fed have now marched into town and they're looking to raise and change their policy. Of course, we've been talking about that story. That's coming up in the next few weeks. Potentially Russia's story going away. It will actually support the Fed story and narrative. So yeah, guys, there's a lot going on. Potentially what I think is short side, downside on the S&P. And this is because of the hiking rate narrative in March. So guys, please manage your risk. I'm also thinking if there's an invasion in Ukraine, which might actually happen, guys, the S&P will tank like 20%. It will be madness. Now, you cannot talk about trading the S&P 500 again without looking at dollar yen and the 10-year yields. Dollar bulls, which will give us a bearish S&P. Bullish dollar yen, this could be dragged around it can go up and down. If 10-year goes higher, by the way, it's the dollar that's actually going to be staying firm and actually going higher as well. But if there's a firm 10-year and a firm dollar yen, it's a perfect environment for S&P to go higher. That's when it could go higher. Now this all means more volatility for us. Now this means your stops might get taken out. Retail traders will not be able to handle this, and volatility will kill most people. So be very, very careful, guys, whether you're a bull or whether you're a bear. Now I'm going to hop on front of the charts. I've actually got a slideshow for you explaining a lot of more of this in further detail. So guys, I'm actually going to show you something that I actually do in my course. If you guys don't know, I have a fundamental course which is on the AstroFX website, and one of the chapters I really explain something that I do every so often whenever I'm lost in the markets, because as traders we can all get lost and lose our way, and my goal is to help you guys figure out the bias always in the markets. Like I said, are we dollar bulls? Are we dollar bearish? Are we risk on, risk off? And sometimes whenever I want to try and figure that out, I use the triangle of truth. Now all this is figuring out what we want to try and look into further, which in the middle here is the S&P 500. And of course we want to try and figure out 3 major talking points of what's affecting that. So of course we put higher volume up here, and I'm just talking about volume and seeing how much of an insane year it can be with everything going on, as I explained before the slide. Here we've got the Fed, who are thinking about doing 4 rate hikes this year. That's going to be a massive advantage for dollar rallies. We've also got a firm dollar, but again we have to be selective on which dollar we want to be buying. And again, you guys can look into that further. I'm actually going to hop in from the charts in a minute, but guys, this is the triangle of truth. This is what you guys should be doing whenever you're trying to figure out the overall bias and direction. And now I'm actually going to go straight in front of the charts and actually show you S&P 500, and let's get a little bit more technical. So guys, here we are with the S&P 500. So now let me actually show you guys the move which everyone is talking about right now, which is off the current highs. We actually had a massive 12% fall to the downside. So these were all-time highs, then a massive 12% fall. And again, I'm going to try and give you my opinion on where I think this is going, but most importantly, why. So firstly, I'll zoom out and I'll actually show you the amazing fib they've actually got drawn on since back, in March 2020, and all the way back up to where we are right now. So for me, it's now touching and kissing that my important fib level at 23.6. Now for me, just to give you a quick little view, I'm thinking if it stays above this, it has the potential to still be bullish. However, if it breaks below this, I believe there's going to be a turn into the market and we are going to fall further. And by the way, guys, S&P is not something I believe you trade on an intraday basis. Oh yeah, let me show you one of the actual interesting things as well. If I go all the way back in time, guys, see this move here? This was back in the stock market crash of 2018. So guys, you can see that. Now, this is actually where the Fed had actually capped the interest rates at 2%. And this is actually where the 2 and 10 year actually inverted. Another important thing I've actually mentioned on the course, which you should definitely go and look at. But this is where the S&P crashed 20%. And this is probably actually from the PPT that actually came back and actually saved it and probably took S&P and helped it be where it is potentially now. So now you're thinking, oh, when are the big boys going to come in? When is the PPT going to come in and help save S&P 500? Now, guys, another thing to always keep in mind is that some people would want it to fall further so they can actually buy it for a cheaper price. There's a lot going on right now. I personally think that it can go down another 10%. And again, the people that are looking at this thing is also looking at why the dollar gets hit. What's going to happen with the S&P 500? What happens when equities are going to hit? Well, equities will go higher. And so for me, it's a big question of, will this fall further? Will PPT kick in? And ultimately, when will the big boys come in that want to try and buy a cheap S&P 500? And will it go another 10%, guys? So that's what I'm looking at right now and everything going on. But now I told you the other chart to look at, which is quite important, is the 10-year yields. So the 10-year yields is an important aspect to the S&P 500. Now, if this cracks lower, this could put massive, massive weight on the S&P bottom line. Many traders will get killed because of the S&P 500. So guys, make sure you go and do your homework. I always look at the 10-year yield. It's always good at helping me understand everything and what's going on. But guys, S&P 500, massive things going on, you know, and have that fib line drawn on there, and let's just see whether this level will hold and break. And I will again be updating you in my future video. Thank you very much.